Welcome to episode 12B, the second half of the show with Dr. Jackson Streeter, director of UF Innovate Ventures. A couple points you made I think are really relevant around optimizing one's capital table. And one is this idea of really protecting your IP. A lot of lenders that lend to startups and what's called venture debt often will really look at IP as the main form of collateral. And I run into this a lot with institutional investors that are interested in investing in A.R.I. and our fund so that they can get exposure to loans to startups. And a lot of folks don't really understand it because they'll often have this misconception that these companies don't have assets of value. They'll say, well, these companies are binary. They're going to be a zero or they're going to do really well. And I think they conflate early stage equity risk with later stage, growth stage debt risk, because a lot of lenders are actually looking very closely at the IP and lending against that as a form of last resort recovery value. And so that's one thing I think has changed a lot as technology has really advanced is that IP now is actually a better form of collateral than physical assets. I mean, I'll often ask people just to kind of put things in tangible terms. Would you, if you were a lender, rather have as collateral an office building that nobody's utilizing, that will probably be empty and maybe demolished because nobody wants it, because nobody's going to work there anymore? Or would you rather have IP that countries and companies all over the world are interested in obtaining, that has a global market that's liquid in a sense because it's easy
Exactly.
to transfer, right? And so that's what a lot of folks don't get. And it kind of bothers me a little bit because I've had this conversation probably 1,000 times, like literally over 1,000 times, whereby people can't get comfortable with venture debt because they're like, oh, there's no hard assets. Like there's actually better asset coverage and more liquid assets with a lot of startups, because not only do you have IP, but you have oftentimes a lot of cash too that has been raised on the equity side that also collateralizes the loan. So my point is, what would you rather have, a building or cash? What would you rather have, a building or IP that many companies want to bid for? And so
Yeah,
that's,
for sure.
yep.
Yeah.
So I wanted to
And
make that
trademarks
point.
are included in that IP. It's not just patents, it's copyrights and trademarks can be super valuable. I mean, you're wearing get your UF gear on there, and the the Gatorade returns money to UF based on the trademark at the end of the day, right? So those can be super valuable. And as much as you can protect copyrights, trademark, and patents, they can build a lot of value. You mentioned venture debt, and that's a good option if you're at a growth stage in particular, where why give up more equity if you can come to A.R.I. or a lender and get the growth capital you need without giving up equity. Often that's a pretty good way to finance growth in particular.
So yeah, I appreciate you saying that. I think that venture debt has become much more relevant over the last several years as companies, as the industry in general just matures, right? As more founders are looking at all their available options, they're realizing, I actually don't need to sell as much equity, and venture debt is a nice complement. And so just for those that don't know, the way it typically works is once a startup has reached the point where they have revenue and they've got some cash flow where they can service the debt and pay the interest, it becomes a viable option. And so every venture lender is different, but generally companies that are doing over, call it 5 million a year in revenue, become a nice candidate to utilize some debt. And the way it probably works in most cases is that it'll be 20 to 25% of a given round of financing. So let's say that you're a startup and you wanted to raise $20 million. Well, instead of raising all 20 million in equity and diluting yourself by selling all 20 million in equity, you might sell 15 million bucks of equity and then borrow $5 million. So you still get your $20 million, but you're saving yourself a good chunk of dilution. So I think it's just something that founders continue to research and learn more about. And most founders get pretty excited about it because at the end of the day, their goal is not to make VCs rich. Their goal is to make themselves rich and to be successful, however they might define that. And usually that means maintaining control and maintaining as much of the economic gains as possible. And so those are the two things that really incentivize them. And if venture debt allows them to maintain more control by selling less equity and also maintain a greater economic interest by selling less equity, then they think that's pretty attractive. So
Yeah,
thanks for
it's a good option for those growth stage companies for sure, I think. We kind of, we're talking a lot about VCs, and they do have kind of a bad reputation often. So to the entrepreneurs out there, I would say, a good way to learn about fund is, the fund that may be investing in you or funds you're looking at, is talk to the CEOs of some of the portfolio companies or companies that they've had exits with. Often, you can get a lot of really valuable information about what that dynamic was like, having that fund and that partner on the board, and what their experience was. And if you can find the good funds, don't get too hung up on valuation often, like the Shark Tank situation where people are, not doing deals because they're not going to give up another 5%. If you've got good investors around the table that have sterling reputations, that have had a lot of exits, that have, you've done your diligence on them with portfolio companies, and it's positive, they can bring a ton of value. So, and yes, there will be dilution, but those kind of investors want to make sure management's taken care of and incented, and they want everybody, oars in the water in the same direction. So, and then there are funds out there that can be predatory, and you want to try and figure them out before you take the money too.
I think that's a really, really great point, Jackson, about seeing how investors act in negative situations, when things aren't going well, because everybody's going to tout the big winners and the unicorns that they helped, right? And they're going to talk about that at every conference they go to and every conference call they have. In fact, it kind of gets old hearing about people's like one or two successes. I'm like, great, you made a bet and you got it right once. What about the 100 that you got wrong? How did you act in those situations? And to your point, I think the best way for founders to figure out who they should work with is to talk to other founders and talk to the ones that weren't successful. What happened when they didn't meet expectations or when things got tough? How did their equity VCs and how did their lenders respond? I mean, were they easy to work with? Were they supportive, or did they disappear? Did they make things worse for them? And
Yeah.
to me,
Yeah.
that's the ultimate kind of litmus test, is to determine what others' experience was in kind of down situations. And so that's great advice on your part. So I want to take a step back and kind of look at big themes in the venture ecosystem. So right now, in your view, what are the most
So we
important?
got to talk about AI, Zach.
Yeah, we're gonna
get
talk.
there.
We got to talk about AI.
All right. Yeah.
We won't start with that, but that'll come up in this question, which is what are the themes that you're seeing in venture right now, or in innovation in general? Which are important? Why are they important? What should other people be looking at?
Yeah, I mean, like you said, capital is kind of tight right now, particularly in biotech. It is starting to make a comeback, but not like it was, 3 or 4 years ago. And that sort of reflects the public markets too, right? As the IPO window shuts, the exits are slowing down. Then money starts to get tighter on the earlier stage, because the funds then have to carry their portfolio companies for longer, and so they're not making as much, putting as much capital into the new companies when they got to carry current portfolio companies anyway. So that's kind of the dynamic that's been going on. It is starting to open up a bit though, which is encouraging in the biotech area. So I like seeing that. So that's a trend that's kind of starting to move in the right direction. I mean, we mentioned AI. UF is, hired 100 faculty before ChatGPT came out, so definitely ahead of the curve. And a lot of this has to do with NVIDIA, where Chris Malachowski, who's a co-founder of NVIDIA, was a UF grad and has been very generous to the university. And we have what's known as the Hypergator, which is the largest computing center of any public university, all powered by NVIDIA, and large philanthropic donations that Chris, as well as NVIDIA, have made to the university. So there's been a big push around AI, 100 faculty hired across all the different colleges to work on AI. So there's been a lot of noise, I'll put it that way. But we are now starting to see we're about to see our first actual company formed, truly based on AI. It's a MRI image analysis software. I won't talk too much about it in detail because it hasn't come out yet, but it's using AI in a analyzing medical imaging. I think that's a great place for it. There's a lot of areas. The practice of medicine will be profoundly improved and changed when AI really, integrates within healthcare. So I'm pretty excited about that. I see that trend. The disparities in care that can occur between an academic medical center and a community hospital. AI can really do a lot to improve standard of care. So I'm pretty excited about that. And there's going to be a lot of good investment opportunities in healthcare and AI, as well as all the other things that everybody talks about.
So let's dig in a little bit around AI in terms of how it can be used. Like, are there any use cases in the health field that you think are most?
Oh yeah, there's a lot. I mean, you look at we've got some researchers at UF that are looking at the smart ICU. And so you look at the ICU patient that has all those monitors and all that data that's coming in every second, and all the different medications and all the different tests. I mean, there's a ton of data flow there, and that's all being studied right now at University of Florida to create what's known as the smart ICU. So, and those, and you really don't know when the algorithms start to learn what they're going to learn as well. So being able to identify when a patient is going to deteriorate before they do, and then a nurse can be, or a physician that can then do some sort of interaction to prevent, before you're behind the power curve with that patient. Those things are coming for sure. So that's just one example. I think in the ICU environment, it's pretty exciting. Also, image analysis. My son-in-law is a med student, and I told him, whatever you do, don't go into radiology, because I just see, AI is gonna profoundly disrupt a lot of practice of medicine, I think. And I think image analysis is one of those areas.
Yeah, I think the predictive analytics will be really powerful because of the amount of data that can be crunched. I just think we're going to be able to see correlations that were harder for us to uncover previously. Because there's going to be billions and billions of data points, right? And at some point, we're going to start to see that AI is going to be able to uncover things that would have taken us a lot longer to do.
Oh, absolutely. When we're using image analysis of looking at the patient in the bed, their facial how is their face, are they starting to get in pain? How are they moving? I mean, there's a lot of things the AI is going to show us that's going to allow us, again, to intervene before things really start to go downhill. So, yeah, we're going to improve patient care with AI for sure.
So this leads me into another key question, which is, how should investors think about investing in innovation? Because there's a lot of options, a lot of opportunities, a lot of ways to lose money as well as make money. So do you have any principles that you live by in terms of investing in innovation?
Well, yeah, I think, learn the hard way always, right? I won't get into the specific investments, but we got a little frothy with some of our investments in the area of cell and gene therapy that got really frothy for a while. And in retrospect, maybe we were caught up in that a little bit. So I think AI now is kind of like that. So again, back to what we were talking about in the beginning, what is the actual product? Is it really going to make it to market? Who's going to pay for it? What are they going to pay? What's the real use case for it? Just because everybody is using AI now, right? But what does that really mean? And how is that product going to get paid for and developed and all that? So I think you always learn a lot by your mistakes. And just because, a bunch of money's going into an area, that doesn't mean it's going to be a good return. So you got to be a little careful when things get frothy. better to get frothy before things get frothy. If you can have the insight to say, hey, the puck is heading here. I'm Wayne Gretzky. I'm going to get there before, you can think about things like that. That's what you try and do, I think. And so, you don't get it right as an investor most of the time. It's like baseball. If you can bat 300, you're doing great. So,
Yeah, indeed. I mean, good innovation investors are going to be right only a fraction of the time. But to your point, if they have disciplined principles and processes that they live by, I think it makes it a lot easier. Because to me, one of the keys to investing is just not getting caught up in the hype, right? And it's funny because the amount of AI companies I see now is actually 100% of the companies I see claim they're doing AI virtually,
right.
right? And it was funny. I had a guest on the show earlier in season 2, Adrian Mendoza, who's the general partner of Mendoza Ventures in Boston. And he was joking about how he got pitched an AI company that basically counts the number of pepperonis on a pizza. He's like, I don't really think that this should trade at a giant multiple because you can count the number of pepperonis on a pizza. Like you don't need AI to do that, right? And
Right.
so
Yeah.
there's a lot of people that are now coming up with solutions for which there's actual no problem, right? Like
Right.
I think we figured out how to get the pepperoni pizza right. We don't need AI to teach us how to do that. But I also
So I try and identify things, that look like they're gonna move in the future before they get frothy. And I really think, I mean, there's some, I maybe because I have a Navy background, but I think, energy and nuclear power and material science related to that. I think there's some interesting things that may happen there. So we're kind of starting to look at that, and some early stage, forward thinking funds that we're interacting with are kind of starting to look in that area. So that's just one example.
Yeah, I think there's going to be a lot of opportunities in dual use technologies that are useful for government and civilian applications. I mean, there's some fairly obvious ones like cybersecurity. It's mission critical for our country, but it's also mission critical for each of us as individuals. And there's a lot of applications that are originally being built for government, whether it's military or other branches of the government, that I think will have huge potential for civilians. And one of the things I like too is in terms of founders, looking for founders that have characteristics that make them more likely to be successful. And to me, being a veteran actually elevates the chances for success, because there's a lot of attributes that veterans have that I think others don't, that make them more likely to be successful. Integrity, work ethic, discipline. Also, I think the power of the network is very important. Because one of the things a lot of people overlook is that when you're seeking capital as a startup, investors are looking at your company thinking about, okay, who's going to come after me, right? To invest in this company in various rounds of financing, acquire the company, or take it public. And I think veterans have a network that's much stronger than most other groups because of the common bond, that they share, serving our country, right? And so that's actually really powerful, because if you're a veteran-led startup and you get to the point where you've raised, a round or two of capital, the likelihood that you can raise more rounds is actually probably much higher versus a non-veteran, in my view. I'm curious what you think about that.
Well, sadly, there's just not a lot of veterans around anymore. I mean, I think there's like less than 2% of the population has any, experience in the military now. But yeah, I think you mentioned some, Zach, that I think kind of resonates with me. I think within the veteran community, I think there is sort of an expectation of integrity, and you certainly have to live that while you're on active duty, or they throw you out. And so I think that just another quality that you look for inside entrepreneurs is like, hey, is this person straightforward? Because again, the VC is looking at the 100 deals to do one. If they think they're being misled, they're out. That's just a real quick way to move on, right? And then I think not 100% here, but I think veterans tend to be people that have a good work ethic, and tend to have good integrity, which is important. It's critical.
Yeah, I think there's a lot of underserved communities, veterans being one of them, that have huge potential. And one of my goals at A.R.I is to create more access that's equally available to great founders. Because I do think historically, where you lived really mattered, right? If you, and where you went to school, and also to a large degree, if you were a man or a woman, or you know, what race you were, that all really played into how easy it was to get funded. And you know, less so today, but it still matters. But you know, I think there's a big opportunity for anyone that's funding innovation to look at some of these underserved segments. And what I mean by that is it could be sectors that are underserved, that are out of favor at the moment. Like right now, everybody will be looking at AI investments, but there might be some really great companies that are in an out of favor sector, but that could be game changers and could be very, very lucrative investments. So I think about underserved sectors, regions like we talked about. You know, I think Florida in the Southeast US is a huge opportunity, but it's not limited to just Florida and the Southeast. It could also be, you know, the Midwest. There's a lot of very interesting stuff going on there. I mean, all over the country, essentially.
Yeah,
You don't need to live in the Bay Area to create a great
right.
startup, right?
They don't have the patent on good ideas in you know Massachusetts and California, right? And there's an interesting thing about Florida. There was a study done where they looked at return on invested capital in Florida as compared to the coasts, and it was actually better return on invested capital in Florida, believe it or not, even though there isn't these enormous unicorns, as many of them anyway, that you see, in Silicon Valley and East Coast, but there's not these enormous inflated valuations either. So the actual return on invested capital in Florida is actually really, really good when you look at it on an IRR point of view. So
Agreed. And I think a lot of the attention is obviously on the big successes or the big failures. And so that tends to be focused on the coasts because that's where most of the larger companies have been formed, and also where more of the bigger blowups have happened. But to your point, I think there's a higher probability of getting on base in other regions because you're getting in at a lower valuation. The founders might be hungrier. They might be less entitled. They might be willing to, go the extra mile, to make their company successful. I'm not saying folks on the coast don't have those qualities, but I also think there's a lot of really gritty people, gritty founders all over the country. And sometimes those that have the least access are the ones that are going to have the most longevity because they're just so hungry. They're never going to quit. They've already survived so much to get to where they are. They've never been handed anything. And ultimately, that's what I look for in founders. But if I'm going to pick one attribute out of every single factor, I would pick the relentlessness of the founder. Actually, let me amend that. Number one is integrity. Number two is relentlessness. If you have
yeah,
integrity and you're relentless, I will be much more inclined to want to partner with you because I think that no matter what happens, you're going to figure out a way to do it and do it in a way that's fair, aligned, and transparent. And so that's kind of what I look for more than anything.
100% agree. It's the grit factor, that is so key to the persistence during the difficult times, right? And that's going to happen with any new company. So yeah, I completely agree. And there's a lot of great teams, and we've got, I'm just thinking of several on top of my head. It's just, you spend more time with the teams when things are going poorly than you do when they're going well. And we've got, and it's awesome. It is so awesome to when it turns around, when you've been in the trench and you get out of the trench, and it's really great. And teams can really come together. It's really cool. It's kind of a beautiful thing to see when you see it. Doesn't always work out like that, but when it does, it's pretty awesome.
And going back to our thoughts about the right types of investors, the investors that want to be there to help when things aren't going well, and that really revel in the success of the rebound, like those are the folks you want to be partnered with.
100%. 100% agree. My company in California had a extremely successful and wealthy venture capital investor, and I didn't really see much of him until there were problems. Then I saw him all the time, and it was amazing how helpful when really needed to be helpful, how he stepped up. And I had 4 venture capitalists on the board actually, and they weren't all like that. Some were just bitching and just complaining, and they weren't helping, right? They were just beating up the CEO, which was me. And then there was one guy though who I don't think by coincidence, actually, if you look at his funds that he'd been involved with, was the most successful guy too. So
we've got about 5 or 6 minutes left, and so there's 2 things I wanted to ask you. One is, in terms of what you're doing at UF, what's next? What are your goals for UF Innovate Ventures?
yeah, so we could always use more money. We've got plenty of deal flow. So I don't know if Ben Sass watches this and wants to double the size of our fund, but we'd certainly put it to good use. I mean, one of the things that we want to do that UF has not done is create a alumni fund, which a lot of the major universities, have. So I'd like to see that happen. I mean, there's a 400,000 plus, Gator Nation out there. They want, many of them want to be engaged, and I think it would be, it would be pretty cool to do that, and I think they would love it. So, yeah.
I mean, I think the alumni network is amazing at UF. I mean, it's funny. I used to live in Los Angeles the last 5 years before I moved to St. Petersburg, and I would wear, hat like this to the Gold's Gym in Venice occasionally. And I kid you not, every time I wore something related to the Gators, I'd have a half dozen people stopping me to talk. And I mean,
Yeah.
there's so many engaged alumni all over the world, and not even just alumni, but also just fans of the
All
university.
over the world.
Yeah.
I was in Arequipa, Peru, and some guy gave me a chomp. I was wearing a Gator gear, walking down the street, and some guy leaned out of a public bus and gave me the chomp. I was like, wow, that's pretty awesome.
I'll tell you, in LA, a few times homeless people have chomped at me and caught me off guard. So that's the only negative. I kid you not. It was like out of the blue. I got like some guy chasing me,
You never know where
chomping
you're
at
going
me.
to get that.
But I love Gator Nation. I just feel like it's such a great group of people, and also very powerful from a business perspective. And that's why it's great to partner with UF, because inherently you get to tap into Gators worldwide.
Yeah. Yeah.
So last question of the day to leave everybody with: what do you think are the key themes over the next 3 to 5 years within the startup and innovation economy that investors should be thinking about, and also founders? So kind of 2 different groups. How would you frame that?
I mean, we kind of touched on a lot of it already. I mean, a lot of these sort of real common, fundamentals, I'll call them, about, from investors and how entrepreneurs should look at. I don't think those rules are going to change really over the next 3 to 5 years. I think, finding something find the problem and go out and find the solution to it. And the other thing I would say is, you don't have to it doesn't have to be your idea, right? You can join an early stage team. If you identified a problem and somebody else seems like they have a good solution, it doesn't have to be, you want to be an entrepreneur, but you don't have to be necessarily the one who's come up with the solution to whatever the problem is, right? So there's lots of ways to get involved. From the investor side, I think it's the same things we've already talked about. You're looking for the right teams, the right markets, the right products. I mean, those are fundamentals that really won't change. There'll be different things, like AI is going to come forward. There'll be good opportunities there. You have to be careful that things are starting to get frothy there. So you got to be mindful of that. But those opportunities are going to come, and there'll be cycles, and you got to be ready for them. And that's part of it. And the other thing, the reason the United States succeeds where other countries do not, is we accept a culture of trying and failing, right? that's okay, right? If you try and fail, I was on a panel at Stanford University once, and somebody said there's no failure in Silicon Valley. There's just, lessons learned to success, right? And that's a great attitude to have, because, you just keep at it and eventually you will succeed. So I think, we've got that kind of innovation, that kind of mindset where we're at down in Florida, and it's growing, and we're in a good spot. I'm excited about what we're going to be doing over the next, not just 3 to 5 years, but probably the next 25 years. I think Florida's going to do a lot of good opportunities here, and we're ahead of the curve, Zach. We're down here now, and I think the landscape from the investor side in Florida is going to grow a lot over the next several years. But it'll be good to be down here early before they all show up.
Yeah, I 100% agree. We're relatively early movers, but I think 5-10 years from now, people are going to be flocking, and I think Florida is just going to be booming. So, how should folks get in touch with you if they want to either learn more about UF Innovate Ventures, or better yet, in actually invest in the fund? What's the best way?
Well, so we don't take limited partners. All our money just comes from the university, so they can't invest in us necessarily. But we've got, you can reach out to me I'm on the website, UF Innovate, LinkedIn. I can be reached.
Excellent. All right. Well, it was awesome having you on, Jackson. Really appreciate you coming on, and look forward to seeing you in Gainesville sooner than later.
All right. Go Gators.
Go
Thanks,
Gators. Thanks, everybody, for listening to the 7 and 7 show with Zack Ellison. See you next time.